Hello everyone, I am Dr. V. Sivakumar, Head of the Department, PG and Research Department of Commerce, PPG College of Arts and Science, Coimbatore. In this video, we are going to discuss about introduction, meaning, origin, definition, and need or importance of auditing under principles of auditing. In this image represents the core elements that make auditing a systematic, reliable process. Auditing connects various components like laws, regulations, standards, data, research, and reporting to ensure transparency and accuracy in financial information. In this picture, you could see it highlights how audit is not just checking accounts, but a complete process involving evidence, compliance, and clear communication. So this is the meaning of audit. Then we are going to discuss about introduction to auditing. Auditing plays a vital role in ensuring the accuracy and trustworthiness of an organization's financial information. It helps identify errors, prevent fraud, and strengthen internal controls for better business performance. Today, auditing is essential not only for legal compliance but also for building confidence among investors and stakeholders. Auditing is an in-depth study of a commercial enterprise's financial statements. An audit organizations can conduct an audit by a qualified internal finance department or an outside third party, but that party must be qualified. All audits are conducted by individuals who possess the requisite skill. It also helps them detect fraudulent transactions in the accounting records and suspicious financial statements. With their expertise in the subject matter, they submit an impartial submission of their reports. Next, we are going to discuss about basis on which auditors conduct auditing. Everyone knows what auditing is, but many people do not know how auditors conduct an audit and what basis they following during the process. In this slide, there are nine process. We will see one by one. Accounting records. Audit is based on books of accounts, journals, ledgers, and vouchers. These records provide primary evidence for all transactions. Next, supporting documents, invoices, bills, receipts, bank statements, contracts, salary sheets. These are all supporting documents for auditing report. Then internal control system. Auditors study the organization's internal controls. Strong control reduce testing. Weak controls require detailed checking. Then audit evidence. Audit conclusions are based on sufficient and appropriate evidence. Includes physical verification, confirmations, analytical review, and observation. Then accounting standards. Auditors check whether financial statement comply with accounting standards, generally accepted accounting principles. These are all one of the most important thing because in our India we are following these two accounting standards, then generally accepted accounting principles. Then IFRS, if applicable. In our India, we are not following IFRS. It stands for International Financial Reporting Standard. Then auditing standards. Audit is conducted as per standards on auditing issued by ICAI. ICAI in the sense the Institute of Chartered Accountants of India, set up by an Act of Parliament, ensures uniformity, quality, and professionalism in the audit process. Next, legal framework. Auditors follow legal requirements such as Companies Act. Every auditors must be follow the Companies Act 2013, then Income Tax Act 1961, then GST law, other regulatory regulations while they are going to do auditing process. Then management representation. Auditors rely on written statement from management regarding estimation, assumption, outstanding liabilities, contingent items. We will see one by one. Estimation means approximations based on judgment, depreciations, provisions, etc. Assumptions, ex expectations used to prepare accounts, example, warranty claims, future growth, etc. Then outstanding liabilities, amounts due but unpaid at year end. Contingent items, possible future liabilities depending on uncertain evidence. Then professional judgment. Auditors use their experience and expertise too. There are four things: assess risk, decide sample, interpret evidence, form audit opinion. Uh, Assess risk in the sense identify areas where errors or fraud are more likely. Decide which accounts need deeper checking. Then decide sample size. Auditors cannot check every transactions. Use judgment to choose how many items to test based on risk. Then interpret evidence. Evaluate whether the documents and data collected are enough and reliable. Decide what the evidence means. Then form audit opinion. Use all findings to conclude whether financial statement are true and fair. Decide if the audit report should be clean, qualified, or adverse. These are all called as the basis on which auditors conduct auditing. Next, we have to discuss about meaning of auditing. Auditing is a systematic examination of books of accounts and financial statement. It verifies whether records are accurate, complete, and compliant with accounting principles. It ensures that the financial statements present a true and fair view of the business. Auditing involves checking evidence, evaluating internal controls, and reporting findings. Next, origin of auditing. The term audit comes from the Latin word audire, meaning to hear. In ancient times, accountants read out accounts aloud and auditors listened to detect errors. Auditing practices were initially used by ancient Egyptians and Greeks and British government. Ancient Egyptians used for monitoring government revenues. British government used audits to control colonial revenue and public spending. Colonial revenue in the sense, example for our India, that is colonial revenue. Uh, the modern concept of auditing began during the Industrial Revolution when large-scale business operations required independent verification of accounts. This is called as origin of in auditing. Auditing comes from a Latin word. Then definitions of auditing. Uh, Two professors given definitions about auditing, Spicer and Begler, then Professor Langster. Spicer and Begler says audit is such an examinations of the books of accounts and vouchers as will enable the auditor to satisfy himself that the balance sheet and profit and loss account give a true and fair view. Professor Langster, auditing is the evaluations of financial records to determine their accuracy and reliability. So mainly both auditors talked about auditing must be accuracy and reliable. That should be very important. Next, we are going to discuss about need or importance of auditing. Already we have discussed about auditing plays a vital role in the financial sector. Now we are going to see about need or importance. We will see one by one. Ensures accuracy. Already we know about accuracy, one of the most important thing for auditing. Detects errors, fraud, misstatements, confirms correctness of financial records. So auditing must be provide proper accuracy. Then build credibility. Audited statements enhance trust among investors, banks, shareholders, government. Why? Because if the company owner can get bank credit, governments and investors also come and invest in their organizations with the help of auditing reports. So it's going to create credibility among the these people like investors, banks, shareholders, government. Then strengthens internal control. Auditors review internal system and suggests improvements. Yeah, it's true. It provide more strengths and strongness among the peer within the organization. Then helps in compliance. It ensures compliance with accounting standards, tax laws, companies law, audit rules. Already, previous slide we have discussed about legal compliances. Auditor must be follow all the legal compliances while they are going to prepare the auditing. Then detects and prevents fraud. Yeah, main aim to detect and prevents fraudulent activity in the organization. Then assures stakeholders. Stakeholders rely on audited financial statement for evaluating business performance. Stakeholders in the sense those who are already dealing with the organization like shareholders, creditors, debenture holders, etc. So this is called as a need or importance of auditing. So far, we have discussed the basic concepts of auditing in this video. I hope you understand the concepts clearly. We will see in the next video. Thank you.